Hello traders, welcome back to Nova Scalper. Today we're diving deep into an incredibly important topic that I usually remind you from every time. Arguably the lifeline for any trader, especially gold scalpers. That's money management and risk management. With an extremely volatile asset like gold, if you don't manage your risk tightly, your account can vanish very quickly. So, how can we intelligently manage our capital and risk to survive and thrive in this challenging gold market? Let's find out right now. You might have a brilliant trading strategy, but without good money and risk management, you will still fail, especially with gold. Firstly, gold is extremely volatile. This means potential profits are high, but so are the corresponding risks. A sudden price whip can wipe out your account if you don't have a stop loss. Secondly, we trade on small time frames. This means every decision must be quick and precise. There's no room for risk management error. Finally, trading psychology is easily affected. When trading with high frequencies and volatile assets, you are very susceptible to emotion influence if you don't have clear risk limits. And now, let's dive into the core concepts of money and risk management. Risk per trade. This is the maximum amount or percentage of your trading account you're willing to lose on each trade. For gold scalping, I recommend keeping this very, very low, around 0.5% to 1% of your account per trade. This helps you withstand multiple consecutive losing trades without loading up your account. For example, if your account is just only $1,000, you should only risk a maximum of $5 to $10 per trade. And next, risk-reward ratio. This is the ratio between the amount you are willing to risk and the amount you expect to gain. For scalping, we usually look at a lower risk-reward ratio compared to swing trading, but it still needs to be positive. For example, a risk-reward of 1/1 or 1/1.5 is acceptable. This means you risk $1 to gain $1 or $1.50. And lastly, calculating lot size. This is how you ensure your risk is appropriate for your account. And this is the similar formula for you. Given gold's nature, setting stop loss and take profits requires a specific strategy. Set a tight and logical stop loss. With gold, you need to set a very tight stop loss to limit losses due to high volatility. However, it still needs to be logical. For example, placed behind a strong support or resistance zone after a confirmation candle, or according to a market structure. Don't place your stop loss too close to get a good risk-reward ratio if it's risk being swept easily. And next, take profits quickly and reasonably. Scalping is about getting in and out fast. Place your take profit at the nearest resistance or support level, according to a fixed pip target that you have backtested and found effective. Don't just try to let the profit run for too long with gold and price can reverse unexpectedly. And next thing, utilize liquidity zones. Areas with many order blocks or high volume nodes, as we learned in the previous video, can be ideal places to set stop loss or take profits because that's where smart money operates. Avoid trading during major news events. It also helps you to reduce risk. You should avoid scalping gold during extremely high-impact economic news release to prevent severe slippage or unexpected stop loss sweeps. Finally, let's look at the most common mistakes in risk management and when scalping gold and how to avoid them. We can talk about holding onto losing trades. This is a fatal mistake. Never hold onto a losing trade hoping the price will reverse. Accept small losses to preserve capital. The next problem, averaging down when losing. Trying to add more trades to recover losses when you are already losing will only make the situation worse. And the next mistake is no stop loss. This is the issue that I usually see for gamblers. Trading without a stop loss is like driving a car without brakes. It's extremely dangerous for gold. With gold, you will have another fault is like risking too much per trade because of your greed. and we never risk more than 1 to 2% of your account for scalping trade. And lastly, will be lack of discipline. Having a plan but not sticking to it. You easily get FOMO unless develop iron discipline. In short, money and risk management are not an option, but a mandatory requirement for every scalper, especially when trading gold. By applying these principles with discipline, you will protect your account, survive market volatility, and gradually build sustainable profits. And yes, that is the lesson today. Thank you for watching. See you in the next video.